So I shall begin today's video with the customary hashtag joyant. Hashtag jubilant hello to all of my good trading friends, the seekers out there of fortune, the aspiring traders that seek to reach new levels in P&L, and even you trolls. I appreciate you too. So I don't even care where you came from, how you got here, what led you to this point. I am just simply glad you are here. And because of that, I promise you I will do the very best I can. Maybe not the best you've ever seen, but I will bring as much heat to this video as possible because I don't like doing boring ass videos. So we're going to talk about some good stuff today. 3 things in particular. The Fed has raised rates faster than any other time in the last 20 to 30 years, I believe it is. One of the most epic rate increases in history, the most aggressive scheduling of rates in history is to combat this 40-year inflation. Does this signal the impending doom of equities, real estate, and dare I say your Bitcoins? We're going to talk about those in just a second. Before I get started with today's video, if you guys want to make money in the stock market, I don't care what this thing's doing, up, sideways, down, it doesn't matter because this whole year we've been green every single month with the part-time trader program. Only 6 losing trades since the beginning of the year. So I don't care what this market's doing. If you really want to make money in all markets, and I'm talking about, you don't want to be a YOLOer, a hodler, or whatever words they keep coming up with. I mean, if you're serious about putting down the excuses and putting up the premium in your bank account, the link is down in the description box. Let me get to this first. Let's talk about equities. Obviously, this was priced into the market. And if you go back to the last couple of videos I have done with these market mutterings and everything else, in fact, I drew what might happen. I was saying that the market wants to rally. Price action was telling us it wants to rally. And how do you know that? We had the opportunity to really break down. Take a look at these levels. If you guys don't understand, and please keep coming back to these videos or watch more of them here on this channel. Trading is all about levels. Don't let anyone else ever fool you about some kind of, chart voodoo or whatever. It's all about levels. Things happen at certain areas and they give us clues to the future. We had an opportunity right here, which was Monday, to really put the nail in the coffin and start selling off this market. But it wouldn't do that. And it knew we were going into the Fed, just like it did here. It rallied pre-Fed the last time. So this is something I felt the market was wanting to do. Now, is this something that we can say the bottom is in? No. Do not be fooled by this rally at all. It's probably going to be short-lived because of the scheduled rate increases. Now, I think what the market was looking for today, the underlying thing they were looking for, they knew the 0.5 point raise was coming. I think what they wanted to know was the tone of the Fed. Now, I haven't listened to it, but I'm guessing the Fed said everything looks cool. We're on schedule. We're going to raise 7.5 next meeting. So everything's on plan. Now, if they start altering that speech and feel that they're behind the curve with inflation, well, then we could see something more drastic. Nonetheless, guys, I think this is just a Band-Aid. And as you know, all Band-Aids fall off. And I imagine this market wants to correct a little bit more. That doesn't mean we can't make money in the short term to the upside, because I think the next move in this sequence is some oversold bounces. But historically, higher interest rates and inflation is bad for equities. And one of the things, if you don't know a lot about trading, I'm not going to go through the whole economic cycle. I'm not the greatest economist either. But after the COVID crisis, we had historically low interest rates, and that makes money easy to borrow, not just for you and I, but also for corporations. It allows them to do stock buybacks. It allows them to finance and grow. That's why growth stocks become so awesome, like Shopify and Square and all the rest of those names, because that's where the premium is. They don't have to be profitable companies. They just have to be growth companies, and it's risk on, and people want that risk. With tightening and without Fed intervention supporting this market, you don't have the same climate as you did in 2020 or 2021. Therefore, with less money in circulation, less money to be borrowed, less growth coming for these stocks and their earnings, it's just traditionally a bad time to own equities. Now, when I say a bad time, I'm talking about briefly. Historically, no, because it's always been a good time to buy stocks historically. So when I'm talking about everything that I'm speaking of today, it's the here and now. It's tradable, actionable, executional stuff. I'm not trying to predict a long-term future, just a short-term future. I know no more than you do. So near term, you will have rallies. There will be some interesting opportunities, but for the most part, we're probably going to end up lower eventually. Maybe next month, who knows, maybe tomorrow, but I wouldn't get too overexcited about the rally. The second one would be another market related, which would be Bitcoins and other cryptocurrencies. And I'm going to admit, first of all, one of the things about a trader, it's okay to be wrong. Just don't be broke. Just don't sit here and run these biases in your head, doing the YOLO, the hodler thing. I'm not a hater of crypto. I'm not dissing crypto here, but I was wrong about crypto in this. A couple of videos, long time, actually a month-long video ago, I felt that once this Russia-Ukraine conflict had broken out, seeing gold rally at that time, I was thinking, hey, what better asset to hide money? Or they removing Russia from the banking system. What better place to put money than in crypto, than in Bitcoin? Countries putting money in Bitcoins. It's a good way to avoid problems just like this. I was wrong because this thing has done jack shit since then. In fact, all it does is go up when the market goes up. What does that mean to me? And I may be wrong. Feel free to comment down in the description box, hodlers, and let me know what you got. I mean, I own some Bitcoins too, but still, look, it's a risk-on asset. If the market's going higher, Bitcoin goes higher, right? It moves when the market moves in most cases. It's not a risk-off asset. And with no risk, it looks like for the short term, this one is done too. Now, it's been done before in the short term. Will it return to its heydays? Will it eventually hit 100K? You guys can make that argument all you want. There's not that many coins out there. Mining this, mining that is the way of the future. Perhaps you are right. I'm not going to say that you are not, but I'm going to say from here, and let's say until June or July, no, this is not going anywhere. And trust me, I'd love to see it go up, but I was wrong about this. I thought you'd see more response, especially once the war broke out. It seemed so common sense that that's what was going to happen. It didn't happen. So that's the deal with Bitcoin. It's following the market. It's a risk-on asset, and we're in a risk-off market. I don't see this moving very far. Which brings me to the last and final one, which we don't have a whole lot of charts here for, which is the real estate market itself. Now, you guys know this is just stupidly crazy. In some of these markets, you have had six-figure price increases over the last month. Now, again, we go back to the money cycle. After the COVID crash, money is easy to borrow. You have historically low, lowest in history interest rates. And the lower the interest rates, the higher the home prices, because it becomes a buyer's market. Money is easy to borrow. And when I say money is easy to borrow, there's a lot of it. And the qualifications to get that money isn't that stringent, not as it used to be. So that fuels this real estate thing. Now you've reached this thing where the prices have gotten so high. A real estate chart, if you look at Zillow, I'm not going to, but if you look at many of them, they have charts on here. This is what the prices look like. They've escalated in some parabolic fashion. And I've asked people before, if that was a stock chart, would you buy that thing? Well, no. They're very, very escalated here at this point. But they were fueled by that free, easy, not free money, but easy borrowing money. Also, COVID contributed to that as well, by allowing people to relocate to cheaper areas, taking cheaper areas, warm climates and other spots, moving out of the cold, working from home or remote work. We could have that conversation some other time too, but that also aids. It's like a perfect storm. Just like my thoughts with equities, if we're talking about 10 years here, this doesn't matter. But in the short term, you are going to see a very aggressive pull in there too, because there is no more money. Now, some people will say, but there's also not a supply. And to some degree, you're right. There isn't, and supply and demand rules. But at some point, that you get high on your own supply, and that supply cannot be paid for anymore. So, for example, I think I read this. I'm just going off the top of my head. Apologize for not showing you stats. I just turned on this mic and said, let me go for it today. That's what you get with Doug. You just get rapping. If you don't believe something, do the fact-checking thing. I was reading somewhere that, like if you were borrowing like a $300,000 house, let's say, you're paying $400 more from December to March in just interest rates. Now with this one, who knows, maybe you're paying $800 more. So now that same home, same value costs a buyer $800 more a month. That's not small money for most people. That's a big deal. And that's going to sway them from purchasing that. And if you look around, you're going to see more inventory on the market for longer periods of time, followed by more aggressive sellers. You're just in the beginning stages of that. But that too shall tumble. It's not going to be a safe haven. At this point, I don't see, which I'd love to hear from you guys as well, I don't see what the next safe haven, other than just buying US dollars, because the dollar seems to gaining strength, and that seems to be what people want to own. Not bitcoins, not euros, not pounds. They want dollars, not gold. They want dollars, right? And right now, that's where the heat is going, in the US dollars. Now, we'll see if that sustains itself, but I don't know. Now, I'm going to close this one today on something I've been talking about from the very beginning of the year, the real secret danger that lies behind all of this. And understand, when you say crashes and corrections, I don't know how far they will be, but they're a process. This thing we've been dealing with is 4 months long, one of the longest corrections since we've had since 2016. So we're dealing with some long-term levels. Some of you may not even been trading since 2016. But here's how I want to finish this up. If you remember at the beginning of the year, I was talking about what a down year in the market could mean. Because I've seen some silliness, and all bull markets, incredibly bubble times, create stupid thinking. That's why you'll hear every bull person say, it's always good to buy the dip. No, it's not. That's why you'll hear every real estate person, oh, we might get a slowdown, but we're okay. Don't believe me? Go to Ben Bernanke, Google it. There's a thing still out here where he's telling everybody the real estate market is solid. We've never lost money on homes. This was 2 months before Lehman Brothers collapsed. Okay? They always say that. That should be your sign. Oh, you never think there's going to be a correction. Okay. So anyway, one of the things I had mentioned is many people were living their life beyond their means. Not everybody, but there's a good portion of Americans that do that. That's how we roll. And one of my thinking was this. A lot of people were spending the money that they were earning in their home. They were taking, home equity loans, remodeling it, buying new things, chasing prices, investing into the stock market, and that paid dividends. I mean, the market was going up 20%. They were even factoring in living as professional traders with the money that they made from the market, except for they really didn't understand what a professional trader was. And I thought, man, if the market just doesn't return any money to these people, and the real estate market just freezes and stays where it is, you're going to see a financial impact on the way people live. Well, it's far worse than that, because the market is dripping down. If you own these growth stocks, you're probably down 50 to 60% on them. I could look at Roku as well. Now, if the real estate market starts to tumble, which I think you will see in the next 60 days, more aggressive movement there, that's going to put the pinch. And we're still sitting here paying $5, some places $6 a gallon for gas. Everything we are buying has increased. And regardless if you want something or you don't want it, at some point, even you want it really bad, you can't afford it, right? The prices just get so high to even the dumbest of the dumb, like, I can't participate. I cannot participate. So anyway, I'm going to wrap this video up, guys. I think what we heard today just continues to spell more doom for this market. There will, in fact, like this very moment, you're seeing some pretty good moves. Shop, Adobe, Facebook, a little bit of money coming back into these names. They don't look so bad. Seeing a nice little rally here. So, yeah, if you're a trader, you can make some money off of this. 3 days, 5 days, maybe you get a 6-7 point squeeze. Hell, maybe we do another 10%er. But I wouldn't fall into the trap that thinking the worst is behind us. Whatever you're seeing now is just simply temporary. And we'll eventually find a bottom, but a bottom will need to be tested multiple times. More data will be needed. Just govern yourself accordingly, my friends. So that's all I'm going to say. I don't know what you think of this video. Maybe you liked it. Maybe you said, you know what? That Doug guy, he's pretty smart. Don't be fooled by that either. Number 2, you might go, this guy's full of shit. He might be the stupidest person that I've ever seen on YouTube. That could be a valid point. I would like to hear why you think that. In an honest way. I'm open to the criticism. Please comment. Just comment on anything. Maybe some of you just do not like the way I look. Maybe I'm getting older. I'm uglier. Rough around the edges. I look tight. Hell, I don't know. Just looking forward to hearing from people rather than posting videos that no one comments on. How about that? So anyway, guys, thanks a lot. Look, if you wanted to become very successful at trading, all kidding aside, I joke a lot, but I don't joke when it comes to money. The results speak for themselves. Every year profitable since 2005. It's down there in the description box. Until then, take care, trade well. I will talk to you soon.